And welcome back. We're going to be talking about Hong Kong now. Very topical topic. And I've got a fantastic panel for you this morning. We're going to have three experts on this subject. First of all, in no particular order, from Voyager Capital, we're delighted to welcome President Johnson Cheng. From Voyager Capital, Johnson. We have from LVGEM China, we have their General Manager, Eric Lee. And delighted to welcome the Chairman of Stan Group, Stan Tang. So can I have a quick intro round of applause from our panelists? There we go, yeah. If you sit in the order of your photos, it makes it easier for me to remember. Fantastic. Well, thank you very much for joining us this morning. I think it'd be interesting for our audience if just you do a quick sort of 30-second, 1-minute intro. Tell us about your company and what your investment focus is. Johnson.
Sure. So I'm Johnson, and I'm the owner of Voyager Capital, a SFC-licensed private equity firm in Hong Kong. We also have a family office that focuses on retail in Hong Kong, non-discretionary retail properties in Hong Kong. Mostly, we also look at the States and in mainland China as well.
Fantastic. Eric.
Hey, how nice to meet you. Good morning, everyone. Yeah, it is Eric Lee from the LVGEM group. We are one of the top 10 property developers in Shenzhen. Our headquarters is in Shenzhen. We have invested some projects in Hong Kong, one of which is an office building in Kowloon East, and the other one is a residential property in the new territories. So for me, I'm responsible for the overseas market, which includes Hong Kong. So I particularly focus in the office sector. Yeah.
And LVGEM, what does that stand for?
Actually, it stands for, in Chinese, it stands for some related to the greenery and also the idea of some environmental sense for my big boss. so we particularly focus in this area. So.
Fantastic. And Stan, tell us about Stan Group.
Thank you. Family business managing 70 billion of Hong Kong dollars portfolio in Hong Kong, anything but residential. So industrial buildings, especially revitalization of industrial buildings, has been our focus in the past 8 years. So we are not only a real estate investor, but we also operate the real estate. So we are running our hotels, restaurants, business centers, and recently we have our corporate finance department, so asset management, fund management, working with different capitals.
Fantastic. Well, welcome all three of you. Let's just get straight to the elephant in the room, the hottest topic of all, the protests. What impact do you think the protests have actually had on prices and sales volumes in Hong Kong over the last few months?
Let me say first. Yeah, I would say actually this recently the market really slowed down a little bit. From the office perspective, the market slowed down, but not as too much as what we reported in some newspaper cutting. So because for the office requirement, most of the companies, they plan the relocation plan or they fix their new lease program actually in the last year, the Q4 of last year. So actually the reasons matter in Hong Kong does not affect them to make a decision so much, but they will really want to have a better price, have better bargaining power to negotiate with the landlords. So I would say for the office market only, not too much, but from my understanding, for the retail market, it really affects a lot, especially for the expectation for the rent decrease from the tenant side. Yeah, this is what I see.
Are there any particular areas of Hong Kong that have been affected more in the retail space?
Yeah, I think so. For the retail, maybe Johnson has more idea about this. But I think for retail market, they still have a certain time to recover. Yeah.
Johnson.
I think retail is definitely heavily affected by the current riots and social unrest and protests and whatnot. I think that a lot of the discretionary spending stores, such as cosmetics or luxury goods, some have reported sales plunged by 60%, 40 to 60%, and I think that's going to have an effect on rent going forward. I think street rents have gone down by 10 to 20%. A lot of our tenants that are in the F&B space, they are asking for rent reduction, but I think for non-discretionary retail properties, they're doing quite well actually, especially those that have supermarkets in them. People are now shopping more in supermarkets because they want to buy groceries and cook at home. I think that traditionally, now we're seeing yield at, people are selling properties at offering a yield of about 4%. We can see, something of 4% now, but we have to be very careful because, back then, about 1 or 2 years ago, when the retail properties were offered at 2%, people were expecting, the buyers were expecting that the rent would increase, so they wouldn't mind a lower yield. But now they're selling at a high yield, but the tenants may move out, they may close down, and so the rent will come down, and subsequently the yield will come down as well. So I think that's what's happening. That's what I've been seeing.
And Stan, what are you seeing?
We see 3 themes happening. Well, the first one being decentralization, people moving out of Central, going to Kowloon East, CBD2, and even sometimes in Tuen Mun and such areas for their new offices and new investments. Second theme is bargain hunting and distressed assets. So for some investments, we could be having 20-30% discounts, whereas people has been holding strong onto their prices in the past few years. And the last one is the GBA concept, where the government has been promoting a lot, but people still see that Hong Kong and Macau is still under a better regulated environment. But now we see that there are more visits and sometimes small amounts being invested by the Hong Kong investors. So I see there are lots of opportunities, but not in the traditional high street retail locations.
And do you think, and this move to be more open to looking at GBA opportunities, do you think that's driven somewhat by the unrest that's been happening here?
Oh yes. Firstly, there are quite a lot of policies and incentives for any Hong Kongers to go work and invest in the GBA area. And also, we have a confidence that this social unrest would not happen across the other side. So it's good for us to make a earlier move.
And you say an earlier move there, so you're sensing that people are hesitant to make investments in Hong Kong, maybe at the moment. They're going to wait and see what happens. Do the panelists agree with that?
I think the first priority will still be in Hong Kong, just in a more CBD2 or other locations, residential areas, which we actually could be able to increase the rent in some locations in Hong Kong. Because we traditionally all of those activities, business activities, has been focusing in Central, Admiralty, Tsim Sha Tsui, and now it's speeding up for us to move into our new locations. The second part will be GBA and even other countries.
Well, let's talk a little bit more about these other locations. You mentioned Kowloon East. I think all 3 of you possibly are interested in Kowloon East. Why Kowloon East? What are the main investment opportunities over there?
Let me share some points for the advantage of the CBD2 Kowloon East. Actually, this is driven by the Hong Kong government for more than, I would say, 10 years ago. And the policy and also the plan is now really under implementation. So actually, the whole area within the CBD2, now we will have some new office, Grade A office, luxury building, stadium, very good waterfront amenity. So everything is coming, all a new concept to Hong Kong. And also the infrastructure which links CBD2 and Hong Kong Island East, like Central, is not far away because there is a very good transportation, like the Eastern Harbour Tunnel, and also everything is good now. So I would say it is now around 10 to 15 minutes. You can travel from the Hong Kong Island East to the Kowloon East. So the infrastructure has been improved a lot for the past 5 years, 10 years. And also, we also forecast many and big infrastructure projects is coming to Kowloon East, like what we see in the past 2 years for the high-speed train from Hong Kong to Shenzhen, which is also very close to the what we say Kowloon East. Like we just need to take about 15 minutes driving distance from Kwun Tong, New Town Clock to the high-speed train station. So everything is new. The concept is good. So that's why Kowloon East is becoming a hotspot in Hong Kong for the business environment and also for us, new player in Hong Kong. We also attracted by the government policy and also the business environment in the Kowloon East. Yeah.
And have sales of new properties in Kowloon East been affected much by the protests and feelings of unease that people might be having at the moment?
Yeah, actually, because we have a project in the Kowloon East is now leasing. So actually, from my experience for the past 3 months, actually, just what Stan say, decentralization concept is really happening in Hong Kong now. Actually, we received a lot of space or leasing inquiry from the island, from Hong Kong Island. So the tenants is now thinking or considering whether to stay in Hong Kong Island or trying to move some, the backup sector, the backup department to the Kowloon side. Maybe they still prefer to a package like keep the front desk in Hong Kong Island with a backup division in the Kowloon side. So I think this will be a trend and also will becoming more obvious, I think, in the next 6 months or 9 months.
Stan, any thoughts about Kowloon East?
There are around 2 million population of 2 million around Kowloon East, from Hong Kong East, Kowloon East, and maybe to Sha Tin. So this area has all the richest and the poorest. So there's a large working population who could serve this Kowloon East. As well as there are many data centers, IT companies, universities, which is also providing a variety to this location. So Hong Kong is not only the financial hub, but it's also positioning itself as a fintech or technology-driven city. So I see that Kowloon East, this CBD2 is also the future of Hong Kong. Not to mention the recent activities are quite focusing at Central and certain areas, but Kowloon East is still a safe area where we see that lots of new activities and vibrance happening here.
Great. Johnson, you were talking to me outside a little bit about Tun Mun, a different area. Why Tun Mun?
Yeah, I personally love Tun Mun because I think there's 3 main reasons. One is if we want to tap into the Greater Bay Area story in the next 5 years, we need to be in a place in Hong Kong that's close enough to the border, but not too far away from the airport and Central. Now, Tun Mun is that place, I think. It's 20 minutes from Shenzhen Bay border, and it's going to be 20 minutes from the airport once the link bridge is built. Tuen Mun is now being revitalized by, when after the Phi City Mall was launched and Century Gateway, I think it looks much better now. There are new developments in Tuen Mun, and I think that there's a lot of opportunities in retail and industrial. I think a friend of mine, he has a lot of business in Greater Bay Area, and he says that he has his office in an industrial building in Tuen Mun, right across the street from Phi City, because that's the most convenient for him and for his family. So I think Tuen Mun is great, and I know for a fact that Tang Group just made an acquisition in Tuen Mun as well. So I personally am very bullish in Tuen Mun in the very long term, despite the short-term protest.
Which sectors in Tuen Mun are you seeing the most potential for capital gains and the best yields?
I think for us, because we focus on retail, I'm still very bullish on retail, but we have to look at non-discretionary spending. I like the Yanqing Street area where there's a lot of wet market, and I think that's still going to be very strong. I think industrial will be interesting right across the river from Phi City. I think there's a lot of opportunities there. I think vacancies will come down. I think companies will move in and start basing their operations there. So industrial and retail.
And Stan, you just acquired something in Tuen Mun, is that right?
Oh, yes. So for us, we see Kowloon East as a CBD2, and we see Tuen Mun as a CBD3 in our vision. So in the recent social unrest, for our hotel portfolio, we could still maintain a 70% occupancy across our whole portfolio of 3,500 rooms. Where our hotels is in Kowloon East, Kwai Chung, Tuen Mun, Tsuen Wan areas. And we don't position our hotels in the Tsim Sha Tsui and Central. That story is telling the audience that we are we're quite confident in the Kowloon East and in Tuen Mun area, especially when Tuen Mun is only 20 minutes to anywhere, to Central, to China. And so recently we have been purchasing more industrial buildings in Tuen Mun. Now we have over 1.5 million square feet of industrial buildings in Tuen Mun, and we are turning all of them into commercial use, hotels, offices, shopping malls, and that's right across the river, V City, where the residential areas are. So our suggestion is to invest into the industrial areas, no matter it's a single unit or en bloc. They are still cheap, maybe $3,000 to $4,000 per square feet, and after revitalization, redevelopment, it could be above 10,000 or even matching the residentials 20,000.
And how easy is it for the process of application of changing it from an industrial to a commercial usage?
So in the past 8 years, we have been the single most investor turning industrial buildings into commercial. Normally the application takes 9 months and the construction work takes another 1 or 2 years, so total of 3 years. It requires expertise, finding the right professional teams, but I think it's really worth it when you know the location and how you execute the whole process. Our other strength is to also operate the asset. So running our own hotels, running our own business centers, and being the anchor, and then other tenants could move in to the remaining portion. It's a very good incentive for industrial owners. And the recent revitalization scheme, we are allowed to have additional 20% of GFA if we redevelop the whole building instead of just refurbishing it. So this 20% gives us another incentive in further acquiring.
And you mentioned earlier that your hotels have seen 70% occupancy. How does that compare with hotels in sort of TST and
so in TST and in the commercial areas, they are around 10 to 30% occupancy, where Peninsula is below 10%. So a lot of owners are now considering turning those hotels back into offices and other commercial use.
Yeah, you can stay at the Peninsula, I think, for about $1,500 at the moment. Great staycation opportunities, if you don't mind a bit of argy-bargy outside. Other areas in Hong Kong that we should look at. We've talked about Kowloon East and Tuen Mun. Any other hotspots?
I think I also personally like Wong Chuk Hang. There's a lot of office vacancy there right now at around 9%, but I think that's abnormal. I think that's also skewed by particular buildings and properties. I think that vacancy rate will come down. A lot of, I'll use an anecdotal example. A friend of mine, he's a family office, and he just bought industrial space that he uses as his office, and it's absolutely phenomenal, beautiful. I think that Wong Chuk Hang, because of the new subway station, MTR station, I think it's going to be a hot area in the long term.
So similar industrialization, industrial revitalization sort of thematic running in Wong Chuk Hang. Do you have any plans for going down there? Island South?
I live there. That's my only investment. I live there. There are opportunities in Wong Chuk Hang. We are just following the greatest strategies of the government and the GBA. So Kowloon East and Tuen Mun Yuen Long will still be our first choice. And I think there are still some lands and industrial buildings in Fan Lang area, Shengshui area, which these all captures the Chinese customers and the GBA concept. So and still cheap. So I would go there.
And at the moment, though, mainland Chinese customers quite hard to find, I guess. I mean, some of the areas I know in sort of festival, Harbour City and West Kowloon and stuff are very empty at the moment.
Because I'm in the tourism industry, for every tourist coming across the border, about 50% stays in the new territory areas for the spendings. Only another 50 coming to Tsim Sha Tsui and Causeway Bay. Although a high spender comes to Tsim Sha Tsui and Causeway Bay area, but for the day-to-day commuting, consuming, they stay at the new territories. So I still suggest Tuen Mun, Fan Lang, and those areas. And as well, the government is opening up the land in the new territories for new residentials and new land supply and all of that, new commercial activities being around those areas. So still, the Chinese cross-the-border concept will be the next trend.
So those areas are more resilient in these times. Eric, any other areas in Hong Kong that you like the look of?
Yeah, I quite go along with Stan and Johnson about the focus on the Tuen Mun Yuen Long. Actually, for our company, we also quite focus on those areas because the distance between Tuen Mun Yuen Long to Shenzhen is not far away. The infrastructure is good. So the people, especially for those daily commuter, they will spend money in Hong Kong. They will just cross the border to Tuen Mun Yuen Long and then go back to Shenzhen. This is maybe one of the majority of people, they spend money in Hong Kong. So for us, we don't too much focus on those luxury retail or the luxury shoppers. We will focus on those people, they spend money in Hong Kong and also go back Shenzhen day trip in this kind. So I think for investment, we can pay particular attention to those areas. Of course, Kowloon East is also a great area. So actually, this is two kinds of market, two different market. So, but I would say for those industrial revitalization project, I think should be a good option for the investor. They want to earn some abnormal profit in the real estate market. Yeah, but of course you need to have a very special professional team to do all the land conversion application and also do some renovation for the project itself.
Do we have any questions from the audience at this stage? Giant. About that.
Mr. Cheng, he probably, if I heard it right, he probably alluded to the fact that it is possible to negotiate your rental agreement. How fixed are these rental agreements? Are they flexible? How long-term the rental agreements people have with the landlord? Thank you.
I think the answer is it depends. I think for our portfolio, a lot of these lease agreements are for 3 years, but actually, because of the current circumstances, they're asking for rent reductions regardless of what's written in the lease, right? You want to keep the tenant, then you want to provide a sort of a safe environment, a product that makes sense for them. But we like shorter leases just because in the previous years when we made the investments, we were expecting that we could increase rents every so often. I think for long, going back to my point is that I think people are asking for rent reductions regardless of the lease, and I think that's up for negotiations. Sometimes they don't write it in because they don't want others to know that they've reduced rent, but they would give them benefits and they would make concessions in other ways.
I guess you don't want your customers to go bust in these times, so you have to be a little bit flexible. Yeah.
And I think it's a symbiotic relationship, right? If you treat them right, and in the good times they'll come back to you. And so I think we want to maintain that relationship with them.
Any other question? We've got a question over there.
I'm quite interested in Kowloon East as well, because I know many financial institutions are trying to move their back office into there. So what do you think about the supply of office and the rental prices will go in Kwun Tong area?
Let me share some of the view. Yeah, I think the property price will, of course, I think will be grow up steadily. I don't think it will grow up or surge up a lot for the next 24 months, but I think it will still grow up steadily, like 5% per year. So this is my prediction. Yeah, for you just mentioned about, actually there are a lot of MNC clients. They are screening, searching, and also they make decision to relocate their office in the Kowloon East. I could imagine, I can say many big names like Citibank, Manulife, JP Morgan. They already locate their second headquarters in the Kowloon East. So this is, I think, should be like a chain reaction. Once you have a big anchor tenant in this region, more and more big tenants will come. Just from my experience, we have a big insurance company relocate to the headquarters in our building, and more other companies, they think it is a right decision to do so. So I think will induce more and more people, more and more MNC clients move in. So I think I would say CBD2 is still a new concept in Hong Kong, because in Hong Kong, no CBD2 concept for the past 100 years. So now this is a first concept for CBD2 in Kowloon East, maybe CBD3 in the Tuen Mun Yuen Long or Tung Chung. So I think the market in CBD2 Kowloon East will become more mature in the next 3 or 5 years. This is what I saw in China, like Shanghai, Shenzhen, Guangzhou. Similar phenomenon happened before. So I think Hong Kong will not be an exception. So CBD2, of course, will be an option for those big companies to relocate their office. I think this is also a very good approach for them to save some office costs, and also save the cost for their tenants. Because in Hong Kong, you travel from Kowloon side to the Hong Kong side, still you need to pay some quite high expensive transportation costs. So I think this is a good way to save everybody's money in the market, and this makes the market more efficient.
In terms of office rentals, rental costs, what are the price difference between Central
this is
Kowloon East?
incredible. I can tell you a figure. You lease an Grade A office in Central or in Shangwan, it costs you about 150, 160. But in Kowloon East, you just pay $30 or $40. So you can imagine there's several times cost saving.
One-to-one groups moving from Shenwan, yeah. Fantastic. Bargain. Any other questions from the audience?
a bit of insight. There will be more central in the future. So for us, we are investing into properties around offices. So hotels, service apartments, shopping malls and retails, but not offices. That's us. So if you would like to invest in offices, I would rather suggest in Tuen Mun because there will be very little land supply for offices in Tuen Mun and Yunnan area.
And I guess right now in Kowloon East, sort of F&B and things like that, there's probably not that much there yet. So your focus is to invest around those offices and to, you know, make sure there's enough places for people to have their lunch and things like that.
Yes.
And come to stay when they come to visit. Absolutely. Any further questions from the audience? Because I wanted to talk in the last, we've only got 8 minutes left, but I want to talk a little bit about one of the other sectors you mentioned outside about senior living.
Yes. So apart from industrial investments, I would also suggest accommodations, senior accommodations, student accommodations, and new co-living concepts. And for Hong Kong, especially in senior accommodation, the government is giving quite a lot of incentives in subsidizing per elderly, up to 12,000 per month for an elderly. So they would be paying nothing or a few thousand extra to stay in a senior accommodation. Another incentive is the land premium. Literally, you only pay $1 to turn a piece of land into a senior accommodation. So the RCHE, we call that senior accommodation licensed for business. And also the population is getting older, and this population, they are wealthier and they are asking for more. So I think it's a good timing to enter not only in the real estate investment for the seniors, but also the operation technologies and different kind of services related to seniors. With this concept, we could also link it to the GBA and China concept. Ultimately, it's too expensive to retire in Hong Kong. And it's good to have a brand, have your investments in the GBA and connecting to your Hong Kong portfolio.
And $12,000, what sort of space would that get somebody?
The new regulation is 95 square feet per person, and that includes the common areas, the corridors, the toilets, and each. So if for your private space, that's a size of 2 beds, and you have to pay for 12,000. So it's really expensive. It's like paying for this 40 square feet, and with that rent, you could actually rent a whole apartment. But in that licensed area, you get all the services, medical care, and related services. But if you use only 6,000 and you move to GBA, you get a few times the space and more facilities and all of that. But at the moment, Hong Kong people are still reluctant in retiring in GBA. So I see that it's a portfolio mixed with Hong Kong assets and GBA assets.
And you mentioned that there's some tech plays within that as well for sort of healthcare monitoring.
The main problem is the lack of manpower in Hong Kong. So there are lots of technologies to take care of the seniors as well as the caretakers, not having to take on all the heavy workloads. So if you could introduce some new ideas, especially with tech, the government has subsidized on that.
And how would those subsidies work?
Very difficult. You have to work with the government and the NGOs to get some subsidized. But it's good that there is funding. You could try some Japanese or German technologies in the senior services.
Excellent. Let's talk a little bit in the last few minutes about the wider GBA opportunities. There were some slides earlier showing all the different areas that are being developed. Where in the GBA do you guys see the best opportunities for yield and capital gains?
Yeah. I can share some points. Actually, for the GBA area, actually many people in Hong Kong are now talking about this quite hot topic in Hong Kong. Actually, for what we're talking about the GBA, there are 9 cities in the Guangdong province which involved in this big region. So among the 9 cities in the GBA area in the mainland China, I would say Shenzhen, of course, is the most worthy of investment city across all of them. Second one is the Guangzhou. So as far as I know, just last week, there's a new policy issued by the Guangdong province government to allow Hong Kong people to invest in Shenzhen and also within this area. So I think Shenzhen is one of the good city, Guangzhou second, and the third one I would suggest Zhuhai, which is very close to Macau. So Zhuhai market will get the advantage from both the investment from Hong Kong and also from the Macau. Because as far as you know, just last year there is a big bridges which connect the 3 cities, Guangzhou, Zhuhai, Macau, and Hong Kong. So I think this city, Hong Kong people can pay more focus on this area. Yeah.
Johnson, any thoughts?
Well, we're looking at something in Guangzhou, and I think that I like it because I think they're competing with Shenzhen in terms of like being a tech hub, especially in the cloud space. I think they're attracting a lot of R&D into the city, and so I think the government is actively subsidizing and promoting these tech companies to set their headquarters in Guangzhou, and I see opportunities in working with these tech companies and these developers in providing the space for R&D and for the engineers in Guangzhou. I think in Shenzhen, it's a very competitive market.
Still expensive.
It's very expensive, but it really depends on the product type. You have to find the right product type that fits your risk profile, right? I think you never really lose a lot of money in Shenzhen in the very long run. I mean, it's kind of like Zone 1 in London, right? But I think if you find the areas where you can have sort of themed developments, I call them, if you have technology parks or if you have new corporations moving into these offices, I think that will help a lot.
You mentioned also their tech, a lot of tech obviously across the board, and some news which came out recently about the Alibaba IPO, pushing forward with their, was it $13.4 billion IPO in Hong Kong. Is that a vote of confidence in Hong Kong, do you think? That maybe the central government are sort of saying, well, actually, we do have faith in Hong Kong's future and here's a little thing to make you happy, cheer up the mood.
I would say it is all market-driven. I don't think such a big investment will be too much affected by visible hand. Yeah.
Actually, I'm quite happy that Alibaba comes. Going back to my other topic, Hong Kong is becoming a financial and innovation hub. So why is Alibaba coming to Hong Kong? Because our exchange rule has changed and attracting more biotech and different technologies companies coming to Hong Kong for raising their fund and setting their headquarters. And I think not because I'm interested in buying the shares of Alibaba, but because of the upcoming more and more varieties of investments happening in Hong Kong. And that also sets the scene for the GBA area, where previously tech companies go to NASDAQ, and now they come to Hong Kong to raise funds.
Well, that's probably a very sort of positive way to end the session. In summary, there's lots of, I guess, some value opportunities to be had right now, but lots of some interesting hotspots there, which our panelists have shared with us. If you have any questions, any further questions for our panel, please do grab them over a coffee outside. But can I have a big round of applause for our Hong Kong panel?
Thank you very much.